Well, thank you, Wolfgang. Welcome, and Hisham, we're very honoured to have you with us. I want to start with a couple of quick thank yous. Firstly, of course, Hisham and CIB for hosting us for this terrific event. We very much appreciate your leadership and your hospitality. I need to also thank you for providing secondee Amin Kerry to our team in the IEF, and indeed Amin has been a driving force alongside Wolfgang in putting this event together. He's also been the lead author of each of the IEF recent deliverables in financial inclusion and digital identity. We're going to hear from him a little bit later in today's program. But at the IEF, we are very much reliant on the secondees that firms such as CIB have very kindly provided, not only for their direct contribution, but also for the role they play in educating people like myself about what's actually happening in the real world today. So we're very grateful for CIB on a couple of levels there.
Our pleasure, thank you.
In the context of our broader Digital Financial Inclusion Summit, our session here on the future of money, we're going to step through a sequence, firstly talking about digital transformation within the banking industry. From that, around some of the particular developments, specifically with money itself, and then more broadly into the implications of that for financial inclusion. We will also look for the opportunity to invite a couple of audience questions, so please have those ready when we come to that time. But perhaps if I start, your own background, you have a very distinguished career in the banking sector in a number of different firms, a number of different locations, covering a broad spectrum of the industry. You're not an engineer or a mathematician or a data scientist by your own background or your own trade. You are a career banker. So perhaps, I'm interested in the thinking and what's perhaps driven you and prompted you to become really a lead adopter, one of the leading people in recognising the opportunities but also the threats of digital transformation. What drove that thought process for you?
We didn't agree on this question, but anyhow, I will answer that one. It's just reading and meeting people. And in our industry and other industries, unless you get engaged with the word, you miss a lot. So when you get engaged with the word, you start to learn. Yes, I don't have an engineering background, but I learn from others. I don't need to know the deep down details, but I need to understand the ecosystem, how it works. It's really started after 2011 by being engaged with other people, hearing about what's happening in the world. And I got more interested. Then my reading shifted from psychology to data and industries of the future. And the best book I read so far was by Eli Cross, The Industries of the Future. And since I read the Eli Cross book, I became really more interested to know more details. It's all about reading and getting engaged with the international world. One thing that, apart from mobile money, one thing that is an advantage in emerging market is things happens internationally, and you see it happening there. I can assure you, it's coming to you. So if you think that something happens in the US or in Japan or in China that will not come to your local market, you are living in denial. And this is why I put the extra effort in. This is just to answer your question, where it comes from. And I rely on my colleagues or my friends worldwide in trying to understand things. Sometimes I call someone up, I said, bring a writing pad. Can you explain to me like this today? There is nothing wrong in learning, and nothing wrong in learning from younger people, but they are much more specialized in the product.
Yeah, absolutely. You've also been at times somewhat pessimistic about the future of the banking industry in light of some of the new entrants coming into the sector, the specific evolution of some of the technologies. I'm wondering if you can talk a little bit more about how you see the threats and the challenges that are facing the incumbent industry.
I'm pessimistic about the future of the current structure of the banking sector, the way we conduct business. This, I can assure you, in 5 years' time or by maximum 10 years' time, it's not going to be there. And if people hangs on the traditional banking and the way we conduct business, look at history and look how things changed in the way we conduct business and get engaged with customers. So several times it was mentioned by the central bank, it was mentioned first by Dr. Amani, unless really the regulators and the governments get really engaged with the private sector and allow innovation and encourage banks to innovate rather than regulate, then the industries we know will die out. And there are plenty of examples. You see what Alibaba is doing in China, and we can go through many examples in the world. But the banking you know today, if we carry on conducting business the same way, we are dead.
So let's delve a little bit further into that line of thought, and I think it's an important one around the role of regulators in either enabling the industry to be able to innovate and adapt, or in the areas where perhaps it constrains. I think a big part of the challenge is the education gap for a lot of regulators and supervisors, that these are simply technologies and the way that they're applied that are simply new territory for them, and there is a war for talent in getting that skill. What do we as an industry perhaps need to do in the way that we partner with regulators, or the way that we can help to influence and educate regulators and help perhaps develop more of an industry and regulatory partnership in working through the shared journey of adapting to this ecosystem?
It's really engagement. We have to accept, the regulator has to accept, let's get engaged together. The idea of the sandbox is a good idea. There is one thing about regulation, and watch that, and you can apply it to other countries. Countries that has the highest level of development and innovation are countries where the regulations tell you what not to do. Period. Countries that has low innovation or more of slower innovation and development are countries that tell you what not to do and what you can do. So it's very thin line in this.
Yes.
And it's all about the mindset. If you see something wrong, say you cannot do this. But saying you cannot do this and you can only do that, where is innovation?
Yeah.
It's not there. So by trying to understand that the world is moving not fast, extremely fast, and there is no way that, and by the way, this is worldwide, even in Singapore, which is the highest market.
Yeah, indeed, yes.
There is still a gap. There is the market is slightly in a skill set higher than the regulator, and that will remain. And it has been there for tens of years. There has to be a trust between the market players and the regulator, where they get engaged and move from what you can not do and what you can only do to what you cannot do. Then let the market lose money. You will never learn without losing money. If the regulators are worried, and by the way, I'm not talking I'm talking the entire continent and worldwide as well.
Yeah.
If regulators are worried about companies or banks losing money, there is something called risk tolerance. You know how to stop your loss. I'm going to invest 10 million. What's 10 million in a billion? Fine, but the 10 million I'm going to invest may change the way I conduct business.
Indeed, yeah.
And so on.
I like the way you make the point there about the pace of change, and it reminds me of a comment that Canadian Prime Minister Justin Trudeau made at the G20 in Hangzhou a couple of years ago, where he said the world has never changed as fast as it is right now, and it will never change this slowly ever again. And I think it's probably a great way of encapsulating quite the pace of that you allude to. I'd like to talk a bit about the transformation agenda at CIB, and I think you've had a lot of great success stories there, notwithstanding some of the constraints that you've alluded to as well. But if we look at the transformation journey, and I know you've been one of the early banks to set up a venture fund, you've got a smart wallet offering, which I think is one of the early ones in the world. What stands out for you looking over the transformation journey to date? And perhaps if we look back over the last 5 years, what might you do differently perhaps if you were reflecting on that?
I would do nothing different, okay? But the key issue here was allow innovation internally. And we started that internally in the bank several years ago with people coming with ideas and innovative ideas. And don't misunderstand me, that we get great ideas from young, middle, and high. It's not about age, it's about the mindset. And I remember very well when we decided to start the journey for data analytics. It was something a bit weird, okay, for others. What do you mean behavior? What do you mean about algorithm? What algorithm has to do with banking? And we started as a small group. And by the way, I got excellent support from the board. And if it wasn't for the board support, it would not have happened. We started to headhunt people who can do things, even small things, like building a data center.
Yes.
It's not anyone can build this. We kept headhunting for someone who have built data centers worldwide and has an excellent track record to come and work for us. And he was outstanding. Okay, he did a great job. My colleagues, they started to improve their knowledge by going for higher education, even with analytics and so on. Now today we have 120 data scientists. We have developed a lot of models, including smart lending and using customer behavior in too many things. And now the project we have today is, with my colleagues on the institutional side, is the predictive analysis. We want to move from just smart credit, customer journey inside the bank and so on, into how can we develop a model that gives an early warning signal to our officers about specific industries or specific credits. So we want to cut the personal judgmental part out of it and become more scientific in your approach to corporate credit. And trust me, it's not something new, because I think this is what Jack May did in SME lending.
You've given a great introduction there to a panel we're going to have in the afternoon talking about machine learning. And my colleague Natalia Bailey has recently completed our second edition credit risk machine learning survey across the world. CIB was amongst 60 firms that participated. And one of the big themes, I think possibly the big theme in that report, was exactly what you've just described, the emergence of more use of that technology, not just for credit decisioning up front, but for this identification of early warning signals. And in particular, the SME segment as being the one where we've seen the most prevalent recent growth in that application.
It's not, again, if you carry on conducting business the same way, fine. I can assure you, a year, 2, 3 from now, okay, you will look around and it's like you're on an island.
You'll be overtaken.
You're dead.
Yes.
You're dead. And this was when London Business School did the case study about CIB transformation. I remember with Dr. Randall, we sat down and talked, and he said, "You are too passionate about it." I told him, "No, I'm too scared." Okay, and this is why I have to do the change, and this is why you have to do transformation, because the world is changing very fast.
So let's focus a little bit more specifically on money, the concept of money and what that means to us. There's a lot of initiatives around the world that I think are quite fascinating. There's the case of the Chinese big payment firms that have emerged very quickly, and in particular the use of QR code technology in their space. There's what's happening in Sweden, which has become already a largely cashless society. Hugh Van Steenis at the Bank of England did the recent Future of Finance report that also identified that the UK was only about 7 years behind that same transition that's happened in Sweden. You've been a big advocate for moving to cashless or to a cash-light economy, and I was wondering if you can tell us a bit more about the drivers and the opportunities you see with that.
Well, I talk about my country, Egypt, now. There are statistics that maybe 40%, 50% of the entire economy is a gray economy. Gray economy flourish because maybe bureaucratic government rules or tax evasion, or it's easier to do business on cash. And it doesn't help the country, because if you say Egypt GDP is an X, you can imagine if you can integrate large part of the gray economy into the official economy, your X will be X times 1.8, 1.7. That change all your entire debt to GDP deficit and so on. 1, 2, as long as you are going with cash, we as financial institution, we don't capture behavior. And behavior means access to finance as well. And one of the things we're saying, when regulation allows that an individual who sits at the remote area or a village in Upper Egypt or in Delta can open a bank account by just using the USSD function in the very simple mobile and start to do payments without. Our colleagues at the central bank, they mentioned, they introduced the Asian banking. Asian banking is history. Paper and pen push will never allow you to do financial inclusion. As long as you think there is a paper and a pen, forget the financial inclusion the way you want it. It will happen, but it happens slower. What we are thinking is, how can you reach to that lady or that person at the far remote area? Download the app or download and you don't need a smartphone, by the way. You can do it on the very simple Nokia or old mobile. And you start to make payments. By making payments and receiving payments, you start to capture data. Okay? And capturing data is not marketing. Capturing data to start to give access to finance.
For risk assessment.
We had a project, and one of my colleagues is here, that we did with Kareem, is a taxi company that was acquired by Uber. And we downloaded an app for all their captains, all the drivers, so the company can pay them as soon as they finish the job. It goes into their account. With that mobile wallet, they can draw cash, pay, and so on.
Cash flow for them, yeah.
And from their behavior over a period of time, we realized we can give nano credits to individual captains based on behavior. Yet the regulation does not allow us to do that, but we can do that. It's all about behavior. If you can develop a model for nano credit for the captains, definitely you can do microfinance and lend to those individuals. Keep that aside. From behavior, again, when you build up the ecosystem, you can give them insurance because they have the right for insurance as well. I always say that digital rights for citizens is like voting rights. Everyone has the right to have a digital access. And those digital rights, it's part of the entire ecosystem.
I think that's a great example, that provision of enabling the provision of microfinance and insurance into the taxi driver community, just one great example of some of the inclusion opportunities. I want to ask you about some of the challenges with inclusion and I guess the challenges that your bank has faced in the way that you're trying to service some of the low-income segments and bring greater financial inclusion to them. What sort of stands out as some of the key barriers and perhaps where you have been able to overcome some of those?
There are two things. Number one is the key stopper for financial inclusion is transaction cost. And that's why I mentioned that paper and pen push is the number one brakes on financial inclusion. So if we start to think from a regulatory side that we want to move away from paper and pen push, then you are on the right track, and let's put the regulation around it. Two is connectivity, because fine, you have no paper and pen push, and you have poor connectivity. And yes, recently the mobile companies, they started to invest in their infrastructure. But we cannot deny in Egypt that we have challenges with connectivity. Not like other markets. It's very good in areas and other areas. Yes. But I think maybe the mobile companies did not make that investment due to the political condition in 2011, 12 until 13, and I'm not sure where Egypt is going. I have dividends I have to pay, I cannot get. But now things are fine. I think it's about time they become more aggressive to catch up. Because the quality of connectivity, I'm quite positive is going to improve, but yet is another challenging thing. But the number one stopper is transaction cost.
I think and that's a point that I've heard well articulated. Annalise Campbell of Standard Bank spoke last year at Risk Minds about that particular barrier. I think the connectivity one, and what really stood out for me in Dr. Amani's presentation was this point around the need for the supporting infrastructure to keep pace. And it's one we see a lot in some of the developed markets as well, and the notion that where you have communities in rural areas, that the provision of broadband technology has sometimes lagged. And as we...
And expensive.
Yeah, absolutely. Yeah, so I totally agree. Let's pause and invite a couple of audience questions. We have a couple of roaming microphones, so please, if you have a question to put to Hisham, we're very pleased to invite that. And we have one down the front from Dr. Amani already, but if we could just bring, if we can come here first and then to the end of the first row. Yes.
Thank you very much. It's a comment, actually, not a question. Thank you for the insightful remarks. Except that I was very surprised that most of the examples that you've given in your comments, Mr. Azlarab, were from northern countries, and it's amazing what's happening on the continent, because we are far beyond, in most of our countries on the continent, far beyond ahead of most of the world when it comes to many of these things, especially in terms of regulation and allowing innovation. Now, the second comment regarding challenges, Carr, and something that was not mentioned. Yes, we can talk about skills, we can talk about infrastructure, regulation, but there is also the way we market financial inclusion. In many countries, financial inclusion is marketed as anti-corruption, tax policing. So the citizen is looked upon as a suspect, not as a contributor to the economy. I think it's also important to factor that in and to make sure that we send the right messages to all of our citizens when we try to market financial inclusion. And I think
spot on both comments. Okay, the one, how we market financial inclusion and how we talk about it in the society and the media, and two, I was just talking locally here, but I have seen an impressive. Dr. Amani mentioned Africa. I'm really impressed. Okay, how in Kenya, Rwanda, Nigeria, and by the way, are all domestic. It's not something that we called, for example, X company in the US or in China to come and do something. It's all domestic solutions, and impressive, really impressive. Zimbabwe. I mean, you think about what Strive did in Zimbabwe with his company for financial inclusion. Really impressive stories. But again, those stories happen because there was an engagement between private sector and regulator, or private sector and public sector, and there's a trust there. And we need to allow innovation.
So once again, you're setting us up very nicely for the day with a couple of the subsequent panel discussions we'll have. We'll talk a bit more about public and private sector cooperation. We'll also talk about interoperability across those different domestic markets, and one thing that I think is really important is when we do have some of these great domestic solutions coming about, we also need those solutions to work for SMEs that want to export, and the role that international banks and the payment systems, the card schemes and the like have in enabling that connectivity across borders. We have another question down the end here, if we can.
Thank you. Yeah, my name is Jalil Tarif. I am the Secretary General of the Union of Arab Securities Authorities. We have in our union about 15 Arab regulators. They are member of our federation. And it's a comment really, and it's related to the role of regulators, which I believe there is a focus since the morning on the role of regulators and how fast should the regulator be to meet the very fast innovation in the financial sector. I don't want to undermine what's the efforts of regulators that they are doing at this stage. Since I am close to regulators and I can see a huge development that's being done from the regulatory perspective and from regulators, and they have devoted a lot of resources, a lot of efforts in order to keep track of what's going on in the financial sector, innovation. However, I don't think we should expect that regulators will be as fast as innovation. This is not only in our region, I think it's worldwide. as you know, the main purpose and the main objective of any regulator is to protect the investors. And protecting the investor is not an easy job. You have to have a balance between how to protect the investors and how, at the same time, encourage and maintain innovation, which is an equation is not easy. There are a lot of work is being done from regulator side, and I'm sure that there are some other other stakeholders also that we should not undermine, that might also affect the whole process. It's not only a regulator that might have some issues that might affect innovation, but there are some other issues related to investors, related to education, related to public awareness, related to how the acceptance by the banking sector, by the investor of the innovation. So this is just a comment. Thank you.
Hisham, did you want to respond to that?
No, I agree with the gentleman. It's a tough thing to have that balance. That's why I say always engagement and trust. I will stress again. You regulate based on what we cannot do, or regulate based on what you can do and what you cannot do. That means that you have no innovation. But regulating based on what you cannot do and the rest is okay, unless you discover as a regulator is something wrong, prohibited as well, that would be the best way. The world is changing very fast. By stating what you can do, that means you are killing innovation.
Which I think underlines the importance that regulation be, as much as possible, principles-based and also technology neutral, and not constrain a particular, or not hard code a particular technology solution, given that the world is moving so fast and we need the industry to be able to move with it. I also want to recognise a point the gentleman alluded to there, that the effort that regulators are making to catch up or to keep pace. And certainly I've got to say, from the IIF, every time that I go out and see a regulator, whether it's to share our research on cloud or on machine learning or on data sharing frameworks, the reaction I always find is that regulators are anxious to learn more. So they're certainly making that effort.
The risk we run as market players and regulator, that you have a shadow banking.
Yes, yeah. You push it out of the regulated sector.
When you have a shadow banking and you push out, it becomes extremely difficult for central banks to implement their monetary policy, and because it's underground. It's not underground, it's overground, but you cannot regulate anymore.
Yeah. We've hit time, but I've got one last question I wanted to ask you. And when we talked about digital transformation earlier, I was alluding a little bit to a project that we at the IIF have kicked off jointly with Deloitte in examining the barriers and also the success factors of digital transformation across the world. And one of the things we've been testing there is the extent to which there are particular firms or individuals, either in the industry or outside, that people are looking to for inspiration or as the great leaders in pursuing digital transformation. CIB, you're obviously a great leader and a great leader within the field and within the region, both in the inclusion agenda and specifically in digital transformation. But I'm curious who you look to and perhaps who you most admire as others, either in the industry or beyond, as people that are pursuing and making the new ground in that space.
Within the industry, I'm not being biased because I work there. I look at Diamond, at JP Morgan.
Yep.
Okay, and those guys, they do it right. They know before they step in, and they know exactly their loss. They know when to stop their loss and change trend. And they have been doing an outstanding job as a market leader in the US and in the world in this part. And outside the industry, of course, Jack May. Look what at the Alibaba, what they are doing with the SME lending. They don't see the customer.
Yes.
The customer doesn't sign any paper. There is no paper there. It's end to end. And I heard someone was telling me that their SME portfolio is performing even better than the Chinese banks, and it's becoming bigger than the Chinese banks. Well, is this not good enough to see the future? I think we should.
Which was your point earlier about being able to use the analytics, the cash flow, and being able to process. Hisham, thank you. I think that's been very insightful. We've covered a bit of ground, a fairly wide range of topics. Please join me, everyone, in thanking Hisham for his insights today.